happen this year. But let's talk about what really does cause a crash or a sudden drop in price or value. This could be housing. This could be stocks. This could be crypto, NFTs, trading cards, art, whatever it is. I think there is kind of one thing and one thing only that really causes a quick and sudden crash. But you may have some other thoughts on that. So I'll let you go first.
Yeah. So when you say crash, yeah, like we saw 2009, 2018, those types of things, yes. Obviously you have to have motivated sellers, right? It takes somebody selling, yes. At whatever price just to get out. So generally it's a panic event. It could be, a black swan, could be whatever. But what we have not seen yet in any of the markets, stocks, crypto, anything, we haven't seen that huge panic sell capitulation yet that everybody's waiting for, to kind of look for that bottom. Mm-hmm. It's been an orderly decline, but yeah, you got to have, you have to have forced sellers, people that have to sell or that people are scared, They don't necessarily have to, but they want to because they're scared of whatever else is going on.
Yeah. I think you use the phrase that if I was asked that question, it is exactly that, forced sellers. Now here recently, probably heard about it most in the crypto market, right? Where Bitcoin went down and touched 17,000 or whatever it was over that weekend. A lot of people were talking about Celsius or these other things, basically margin calls, right? Forced sellers. You don't have a choice. It was done for you. That happened in stock markets, right? In the stock market, when you're betting on meme stocks and it suddenly goes the wrong way, you can be forced seller. And housing market. People may not realize this, but there were forced sellers last time. You were basically, when your mortgage reset, it was cheaper to rent. Now hence the term strategic default. So if you are looking for a quick crash in housing prices, which so many people want, you have to ask yourself quite simply, what would create wave after wave of forced sellers? That's where I go. And, things could happen to do that, but it ain't gonna be the mortgages. Cause right now, 98% of them are fixed, most of them below 4%. But that's what it is for me, is forced sellers, either via margin calls or, strategic defaults, walk away, things like that.
Yeah. So the other thing that would happen in the housing market that would create forced sellers at scale, it would be layoffs, right? So we're starting to see layoffs. We're starting to see, the job market shift a little bit with the economy changing, company after company, sector after sector. Wall Street banking is starting to lay off now because the whole, easy money last year of the SPACs and the LBOs and, taking companies public and all that stuff is done for now. So they're starting to lay off a lot of people, and we're seeing the crypto space lay off. We're seeing, other, companies lay off outside of the, the financial world. But that's the one thing that could potentially, create a situation in the housing market if people start losing their jobs and they have to sell because they can't afford their mortgage, and mm-hmm. or anybody who's on an adjustable rate mortgage that goes up, those types of things. But it would take a big event, to create mass forced selling in the housing market, or banks failing to just start calling loans because they can do that, So those types of things. In financial markets, a little bit different, right? There's things right now, especially with the headline risk that's out there. Mm-hmm. It's like, little bitty headlines like the what was it? The report that came out last week from the Columbia University. One little, 0.5% of a positive thing and bam, markets, rebound. But if it comes out, with a hot inflation print, bam, markets are going to go the other way. So that can create, like you said, margin calls, liquidations, forced sellers that, are out of position. In crypto, all it takes is just a little bit what's going on, the whole tether thing. A lot of big hedge funds are starting to short tether. There's they haven't been exposed yet, but they're getting ready to be. So if that bomb explodes, that could create another capitulative event and panic selling in the markets in crypto. It's not huge, but the crypto market now is down under $1 trillion, and mm-hmm. That's 68 billion. So it's 10%. Roughly 8 to 10% of the market right now, and that would create a lot of panic.
Yeah. So if we keep it in the housing world, because I get asked all the time, because again, I keep saying no pricing crash this year, and people are like, "How could it be? You gotta have a crash." So again, I've come up with a list of things. So if we had 10% unemployment for greater than 12 months, that's because again, you have to go past unemployment. You have to go right unemployment benefits. You have to understand that something different about the banks today versus 15 years ago is banks have already proven they will extend and pretend. They'll do 40 years. They'll do, again, if we go through a big, who's to say that they don't go, hey, whoa, well, let's talk to you. And So again, I think banks act very differently. But again, 10% unemployment for a long time, that could stack up and create forced sellers, I believe.
Well, and inflation, just inflation. I mean, people right now, when it comes down to you're going to buy food, or you're going to pay your mortgage. I mean, people are going to default on their mortgage and cover their other expenses first.
Well, let's play with that, because I don't agree. I don't agree, because I think, again, especially we talk about a house, right? Because what I think people will do is they will get roommates, because again, they're going to look at their house. Because again, the option is, what are they going to do? Live in their car? No, they're going to rent an apartment. And if you guys haven't watched the rental market today, rents are up. Most people that will be making that decision, in my opinion, Greg, their mortgage is below rent. So what they'll do is they'll bring in a sister, a brother, a parent, friend, neighbor, whatever, and they'll just house hack. They'll just do roommates or whatever. So
yeah, that might work for somebody, but that's not going to work at scale for everybody.
Okay.
So with inflation where it's at right now, and you're already starting to see it in the rent world, a lot of people are not paying their rent because of inflation. They're having to make those choices.
Totally agree.
That's the first thing that goes. And then what do? They just move, because there are rental units, maybe not the one you want at the price you want, but there's places you can go. But when somebody, and then when you say it's cheaper to own than it is to rent, maybe the payment might be a little cheaper if you got 2.5%. But when you add taxes that are going up, insurance that's going up, maintenance that's going up, energy costs that have gone up, when you add all of that, that's the inflation I'm talking about. Those things are going up on the homeowner. Food's going up on the homeowner. Gas is going up on the homeowner. So when you're looking, it's the same decision if you're a renter. When you're looking at the kids, you got to start deciding, wait a minute, if my living expenses have gone up $1,000 a month for a family of 4, which it has with inflation, that's huge. It is. So then when you get to that point to where you're like, look, I got to buy food, medicine,
gas,
things this month, but I don't have enough to pay the mortgage payment. What are you going to do? You're not going to pay your mortgage payment. Then once you get 2 or 3 months and the lender's on the horn, and then you start talking, then you start looking at, well, how can I make this up? Second job, rent a room out, whatever you can do. But if you got a family and you got kids, you're not bringing somebody in your house. You're just not going to do it.
Yeah, I really think, and this is why I'm telling landlords in apartments specifically. Again, I lived through this as a kid in the 70s. We had to buy food instead of paying our bills, right? So, I've been in that environment. I remember as a young, hearing my parents talk about that stuff. It's horrible. And I think
the good news is, and for anybody listening, if you're in that position, like you said, banks are very different now. So banks will give you a one-time payment forgiveness. So if you're in a bad spot and, you can call the bank and they'll just put it on the back of the loan, they'll do those things. Or if you get, 2 or 3 months behind. And so it takes time. Again, this is all stuff that takes time, but people are in real time making those decisions right now. We're already seeing it in, I don't know that defaults are going up significantly in mortgages, but
not yet.
That would be the thing to watch, 30, 60, 90-day late. But rents, we're already seeing rent defaults go up already.
I totally agree with you. I believe, again, what I'm telling landlords is stop raising rents, be more careful, because I think there's a lot of people planning for years and years of rent growth. I'm like, that party's over. You got to be, you may even have to, in some apartments, lower rents, because rent's not top priority, folks. Food's top priority.
Yeah. And I've always said, especially the last couple of years, you can't raise rents exponentially in perpetuity. At some point, you're going to reach critical mass. And we're already reaching it in a lot of markets. Inflation is really exacerbating the situation.
I agree.
So, we're seeing pushback there, and people are moving, people are not paying, and people know how to, now after what they've gone through in the pandemic, professional renters, you call them, they know how to play the game. So they know they can tie up a landlord for 6 months to a year in a lot of markets.
Yeah, no, I totally agree. So the other things that I've thought about that could cause forced sellers, because I get asked this all the time. Here's another. Again, I'm not calling for these, but I'm just like, okay, what could create forced sellers today? Theoretically, the government could institute a rule, a law, whatever they would call it, that says you can only own 2 homes. In theory, right? If you own more than 2, you have to liquidate in 12 or 24 months or whatever it is, right? You have some period of time to get down to this 2 level. Now that would, you'd be touching property rights and likely very unconstitutional. But again, when you I'm starting to think about like what could cause a wave of forced sellers.
Let's be realistic, because that's not even realistic, so that's not, awesome. Nobody's even talking about, that's never been a thing. That's awesome. China. That's China. So let's talk about what's realistic and possible.
Okay. All right. Fair enough. I was trying to create a list of things because people always ask me.
Let's be realistic about it. So number one, inflation, obviously at all levels.
Mm-hmm. High unemployment, long time. What about World War III? Like something scary, like active troops and things of that nature.
Yeah, I don't know why that would force you to sell because, again, if you get called to active duty, then there's protections to where you can't be foreclosed on. There's a lot of protections there from a tenant standpoint, employment standpoint, banking, but bank failures at scale because, again, banks can call your loan due pretty much any time if the bank's failing.
Okay.
So that type of a, thing like there, I don't know that war would do it, unless we get invaded and,
like
neighborhood.
That would not be good. I can't really think of anything else. It would, again, anything that I could think of would be would be quarters. Like unemployment doesn't go from 3.6 to 10 other than when you shut the country down, right? It doesn't normally jump that fast.
Severe recession or depression. I mean, a deep recession, depression, which I don't even know that a depression is possible. And let's talk about recession. So,
sure.
Maybe we're talking about it next episode, but, technically that's negative GDP, right? For 2 consecutive quarters. It could be 0.1% negative GDP. So a recession doesn't really mean anything. Deep, where you got layoffs, you've got, no jobs, you've got, serious problems, those types of things, could create, like we've talked about, forced selling. But, that's really about it. That's realistic. The government wants home ownership. The only other thing would be some sort of a shift, towards, less home ownership rights. But again, that's a huge one.
Yeah, exactly. I mean, it would have to be something like that. I think kind of not on the radar, totally black swan, probably are very much unconstitutional. The other things that are kind of small that people throw out sometimes, which could have city pain, but I don't think hurts the national picture. Airbnb. We've seen some cities like there was an island of Hawaii say that you can't do a short-term rental less than 90 days. That's a hell of a short term. I think Atlanta is coming for Airbnb. You can't have more than 2. There could be there could be local municipalities that attack short-term rentals because again, when you have a short-term rental, you're taking something out of the long-term pool or ownership. I think there may be some of that. You may have iBuyers like Zillow decide to exit because they're not profitable and they're very bad at it. I don't think Wall Street, like these people buying neighborhoods, really hurts because I don't think they list individually. I think they always sell to a different fund, right? Hey, I got 500 assets in Texas. Who wants them? And they sell it one time.
Yeah, and again, those sellers aren't going to dump everything at once. Like one of the iBuyers might be forced to, but generally they would probably sell to a fund before they would just.
They would try, yeah.
But those could be forced sellers, just like an Airbnb owner.
Yeah.
But the question is, are those forced sellers, do they have enough inventory to make a dent in the housing market right now? Probably not. I mean, you're not going to get Airbnb sellers at scale everywhere that would even make a difference in the housing market.
No, that's it could impact like Lake Havasu or like some very much a short-term rental spot that got dominated. And the only reason I picked Lake Havasu is it was the 5th most overvalued market, and of all of them I listed, that was the one that felt very vacation-y to me. So
yeah, but I guess we're talking in general, the average individual, what's going to, the housing market of the country, because investors are such a small percentage.
Oh yeah,
they could all liquidate, and then you might get back up to 2 million units, maybe on the market.
Yeah,
it's just not that they just don't own that many, single family residential homes. So that's what we're talking about. We're talking about primary residence. What would create a forced selling situation, and again, it's going to be some sort of banking crisis. It's going to be a deep recession. It's going to be super inflation. I mean, if inflation doubled, everything, you'd see massive defaults.
Yeah, it would be a problem. But again, that would be, it's just all what I want people to realize, at least about the housing market, is it's not instantaneous. It's not, it's not a margin call you have to liquidate. It's a decision. Even when you have a mortgage, even if you don't pay your mortgage for 3 months, there's nothing that happens, right? An NOD, what's called a notice of default, doesn't occur best case until day 91, right?
Yeah.
So again, it's all time, right? And it's just extends. So
yeah, that's what I was saying. It's 6 months to a year, best case for somebody who's, in default in rent or even in housing, and with banks the way they are now, they don't want people to default.
No. And then the other thing that you may remember that most people won't is once we had the forced sellers of the Great Recession, the average days to foreclose in many cities exceeded 1,000. That's over 3 years, right? So again, it's not going to be soon. So that's what causes crashes in prices is forced sellers. in my opinion. So Greg, where can people find you?
Yeah, gregdickerson.com. That's where all my info is. Go check it out.
Awesome, buddy. Folks, if you do have another forced seller, what would cause it? Leave comments below. Greg and I look at these things. Maybe there's something we missed. If you have something, let us know. Thanks.